All right, good morning and welcome to the West Virginia Wheeling Area Economic Outlook Conference. We're really happy to bring you this conference to help you understand what's going on with the Wheeling economy in terms of where we've been during this crazy year and in terms of the outlook that we have ahead of us and also with the consideration of the challenges and opportunities that we have for the state and for the Wheeling area, especially in light of all the changes that have come about through the COVID pandemic. Of course, I'm John Deskins, Director of the Bureau of Business and Economic Research at WVU. I'll be giving the state economic outlook today and the regional economic outlook. But then we have a broad lineup as well of some really skilled speakers who have a lot of good, rich information. I'm going to turn the program over first to David McKinley, President and Chief Investment Officer at McKinley Carter Wealth Services. He's going to give the national economic outlook, and then he'll come back later and lead some panel discussions after my talk. So I'll turn it over to David.
Great. Thank you, John. I assume I'm unmuted. All's well. Good. So I am happy to welcome you this morning to the, I'm not sure, I think this is the 27th annual that WVU has done. And I'm not sure how many have been done in Wheeling, but I know over the last 5 years or so, I've been very intimately involved with John, helping to make sure these are as relevant and valuable to our business community and government leaders as we can. I've been working our way through a variety of topics, and we'll touch on those in just a few minutes. On behalf of Erica Storch and the Wheeling Chamber, I actually am I'm going to make a few introductory remarks. One, we want to be thankful for our partners. So now I'm speaking with my Wheeling Chamber hat on, so to speak. We're very thankful for WVU's John Chambers College of Business and Economics, and of course the work of John Deskins and Brian Lego and so many others behind the scene. They bring lots of valuable research that most of us in small to medium-sized businesses just don't spend the time gathering this kind of economic data. So it's an annual refresher for us. And of course, to Erica Storch and the Wheeling Chamber, distributing valuable content to members, and we appreciate her helping us distribute this. But we also need to thank our sponsors. And the first of them I want to thank is RED, Regional Economic Development Partnership. They've been a sponsor of this event for years, and a particular thanks to Don Rigby, who, for those of you that are aware, he's in the midst of a transition. He's retiring after a long and successful career in Wheeling and Weirton and elsewhere. So we just big thanks to him and congratulations to his successors. For those in Wheeling that are familiar, Brian Komorowski, Craig O'Leary, and Josh Jefferson, the trio that have been right behind Don for many years, remain in place and will lead the organization into the future. Josh Jefferson in particular will assume the role of executive director, so we congratulate him on that. Also, among our corporate sponsors, this is an unusual year, so sponsorship's a little harder to come by, but we do have three we can count on, near and dear, close to my heart: McKinley Carter Wealth Services, Omni Strategic Technologies, and McKinley Architecture and Engineering. So I want to thank them all for contributions here today. The last thing I want to share, and Dallas and John, we actually didn't coordinate this very well. I want to make sure I'm clear on what we're doing for the Chamber and the CE credits. Throughout this morning, we'll start here in just moments, and we'll wrap up a few minutes before 10. Throughout the morning, after each session, we're going to share with you a 3-digit code, and those that are seeking CE credits will need to send an email to Erica Storch, and her email address is estorch@wheelingchamber.com. Send that to her within 24 hours with those codes and the sessions you attended so that you'll be eligible for those credits. John and Dallas, anything else we need to share around those credits?
I know of nothing about the credits to add, but I would just say the only thing to add is to be sure to remind the audience to submit questions through the Q&A function as you're speaking, and then we'll get to those at the end of your time. Absolutely. Great. Thank you. All right, let me flip into share my screen here. Well, actually, I should just quickly highlight the program. This is an unusual year in which we're not together. We don't have a bulletin we're distributing. So we'll start this morning, as John said, with an introduction to the event, and I'll do the national and global outlook. John will do the West Virginia economic update, and then we're going to turn to Greg Corio and Danny Twilley, who are
going to talk about a really attractive, a really interesting program that was introduced on October 5th, attracting remote workers to West Virginia. And then lastly, we're going to wrap up with Mike Green, who's the managing director of Mountain State Capital, and he'll talk to us a bit around accessing and attracting capital to either to thrive, or in some cases to survive in the current environment. So looking forward to that. I know we did a similar program in Charleston just a week or so ago, and it went very well. So I'm looking forward to today. John appears to be frozen on screen. I wonder if he can turn his video off there.
I'm not for sure what's going on with that, but I had stopped my video. Maybe that's a glitch, but I would just say do your screen share and that'll probably take care of it.
You bet. I'll do it. Okay. We sharing my slides?
Yes, you're good. I see them.
Very good. Thank you. All right. So again, the purpose of the National and Global Outlook is, as we open up our day, is just get a sense of what kind of a headwind or tailwind do we think West Virginia might be experiencing? Set a little context, and then of course we'll turn to John and dig a little deeper into the Wheeling area and other areas of the state. You know, in short, this has been a pretty unusual year. I think everybody is experiencing this in their own way. And so I'm going to share a few points, but let's be clear here that it's a pretty ambiguous future. All we can do is stack the odds of success in our favor, but there's certainly there is no certainty about where we're heading. I think uncertainty is a theme we ought to live with. We will be living with for some time. And I think it's a point that I'll emphasize throughout our slides. But initially, I want to just say things look to be improving, but economic data is mixed. It is improving, but it's mixed. It is not. There are not clear. It's not a widespread gain, so to speak, but lots of areas for optimism. On the other side, coronavirus data. You know, thinking about health trends both around the country as well as overseas, are mixed, but generally numbers are increasing. Now, some of that you could say increasing testing and of course is going to lead to increasing cases, but death rates are actually increasing in certain areas too. We'll share those thoughts with you as well. And then lastly, at the end of the day, if we're making investment decisions, where should we be, in stocks or bonds? And of course, in the context of this conversation, do we invest in liquid investments in our portfolio, so to speak, or do we invest in our communities? Where do we think the greatest opportunity for returns are? Well, we'll dig deeper. So the first of those signs, PMI, Purchasing Managers Index. What are things? How are things improving? And we're going to look at it in two ways: services and manufacturing. Of course, you saw a meaningful contraction in both areas in the spring of 2020, but a pretty healthy recovery as well. And you had kind of a mixed results if you look back over history. But really coming into the pandemic, both were improving in a pretty meaningful way. So we're hopeful that we get back on track, so to speak. There are a variety of other data points that you have high frequencies of reporting, so to speak. So you have lots of data points. Let's look at just 5 or 6 of them. I'm not going to go through every single one, but I will just kind of generally point out themes. The trends are on the rise since the declines back in March. One that I'll call out specifically for those that have not yet boarded a plane. I know I'm one of them. I haven't been on a plane since March, and I normally fly pretty frequently. Earlier this, was it late last week, early this week, the TSA checkpoint data, daily traffic hit 1 million people for the first time since March. So there definitely are improvements. I wouldn't say that we're in the minority yet of those that haven't yet traveled, but I think that the numbers are increasing. People seem to have a level of enthusiasm for getting back to normal and going about their lives, whether for business or recreation. People are again starting to travel. But I think there are other areas. Seated restaurants might be a tough spot to be, and particularly as we enter the winter months. But generally speaking, again, things are trending higher. Housing starts has been a really interesting turnaround, and I'm not sure to what all we attribute this. People may be wanting to leave apartments, or this is the demographic cycle, the millennials buying their first homes. But the numbers look pretty strong, and those are clearly supportive of economic growth. If we roll them all up rather than just looking at these individual points, and you look at, one of the things that we like to look at is the leading economic indicators, and it's released every month by the Conference Board. You can see the history over the last roughly 60 years, a fairly strong upward trend. But then in the inset, the little table there shows, of course, how meaningful a decline it was back in March and April. But we've again seen fairly healthy recovery since then, and we remain optimistic that the data suggest an expanding economy. But let's turn to COVID for a minute, because that could be a derailer. And so we think of, on the left-hand side, we're looking at cases. What is the 7-day moving average per million people? And so you can see most areas are actually improving pretty significantly. Testing cases are up, yes, but death rates are generally down, with a notable exception, Europe, and I would say the UK in particular. We're not sure how this will play out over the winter. I don't think any of us know, but this is one of the key points, I guess I would say, is just kind of keep a finger on the pulse. How will this play out for us? For those that are using the market as an indicator, as an evaluator of confidence, things look pretty darn good. We have seen such a healthy recovery since the declines in March. I think most people are surprised. But let's be honest with ourselves, the Federal Reserve has taken extraordinary measures to buoy the economy and provide liquidity, and again, the confidence necessary to make investments in our portfolios. And the next step, I guess, as we think about our Wheeling area economy, our willingness to invest in our community and businesses and real estate. In portfolios, it's a bit of a tale of two cities. You've got growth doing extraordinarily well, largely led by technology. We'll dig a little deeper into there. But then on the other side, we'll call it value-oriented value-oriented investments. Think of major industries. Think of banking and manufacturing and utilities, et cetera. So many more value-oriented industries. It's been a pretty tough place to be. And so it's interesting as we see how strong the market has been and how different experiences people could have. And unfortunately, in West Virginia, as most of us I think know, we rely heavily on those basic industries, and we're less dependent on technology. Although we are benefiting from technology investments, and we'll talk about that in a bit in a couple of different places today. The last point I'll talk about this on the technology side is technology spend, and of course it has been significant in driving it. The COVID-19 experience has accelerated spending in technology in a meaningful way, and as we talk with Greg Corio and Danny Twilley, I think we'll come to realize that it's those technology spends that I think creates a really competitive advantage for West Virginia. It may not necessarily be the industry. It may not be because technology lives here, but it's technology's enabling people to live here. Another point I'll make, I think this is the last one actually, around technology is that it feels a little bit like the late 90s, where a very concentrated few companies and / industries were driving returns. And if we look, it's pretty clearly technology. Apple, Microsoft, Amazon, Alphabet, and Facebook, technology-driven companies are driving that growth index higher. So it's, again, a little deceptive. But we're starting to see things spread out. We're starting to see a broadening of performance, and I think that we're also seeing a broadening of company, not just stock performance, but company performance. And it's exciting to see people coming out of the quarantine environment and moving back into a life, more typical life as we see it. I just hope we can continue that experience over the wintertime. I know I'm seeing a lot more of that in our area, and I hope we'll see those national statistics as well. A couple of quick points I'll make around the market generally, and we'll move on. Is the stock market's actually pretty richly valued right now, and I'm not suggesting that is the beginning of the end of an economic expansion. I just think that coming out of the environment we were in, it's pretty tough to be producing earnings, and so we've got multiples well above kind of historical norms. But the reality is, where else would you invest? And so I share this slide with you to put something in perspective. Stocks versus bonds. Bond portfolios, the valuations are extraordinarily rich there too. In fact, more so than stocks. And so we actually prefer, although stocks we think are overvalued considering the current environment, we prefer stocks over bonds. The yield curve, there was a point where it's hard to believe we were concerned about an inversion of curves that would have led to an economic recession. Boy, things certainly changed. We have flattened that out, reverted it, so to speak. But it is important to note, though, that just a few months ago, in March of 2020, the 10-year Treasury actually hit an all-time low of 0.5%. These rates are in fact rising a bit, but the 10-year is still at 0.75 percentage point. And so for those of you that are, thinking about investing or thinking about borrowing, couldn't be a more attractive time. I hope you're considering the opportunities that are out there. The Federal Reserve has made it very clear that there's no interest in rising rates anytime soon. I suspect that we're going to keep rates modest for years into the future to give ourselves the stability and confidence to continue this economic growth. There's a lot of money on the side, a lot of money in cash. If you notice here in the period of 2020, people queued for investment. The savings rate, frankly, peaked at 34% in April and is still in the mid-teens. These are extraordinarily high numbers. I guess when you don't have the time or the availability for travel or eating out or all the different things that we spend money on, frankly, you save it and you pay down debt. And so there have been some real silver linings in that environment. Many people have kind of shored up their personal finances. What'll be interesting is how they end up deploying that cash, whether they're investing in their communities, investing in businesses, or investing in markets. There will be a deployment of cash, and we've seen a bit of that here recently, but there's a much more to go. The Federal Reserve, as I mentioned, is kind of backed off. So the two mandates of the Federal Reserve, one is stable prices, keeping inflation around 2%. And the second is full employment, keeping unemployment, I should say, under 5%. The reality is they've essentially said, we're not worried about inflation. We can allow that to rise above 2%. We won't move to hike interest rates anytime soon. So we take that off the table, so to speak. I want to spend a little time thinking about the outlook for earnings. Where do we see things headed, and what is the outlook? Again, what do we have, a headwind or a tailwind in store for us? So like I've done in recent years, I'm going to break it down into 4 categories. The S&P 500 representing large cap US stocks, the S&P 600 small to mid cap, the EFI is developed international, and EM just short for emerging markets. We've got some really attractive numbers. Of course, 2020 is tough. Both earnings and revenue are off meaningfully across the board, as you would expect. Take a look at 21. Look at the improvements that we anticipate here. Phenomenal numbers in the S&P 500 up 20. We're expecting earnings to be up 25%. The S&P 600 45%. On down the line. What's interesting and maybe disturbing, just to really put the damage into perspective, is that the reality, even with such growth in 21, we don't get back to a trajectory increasing from where we were in 2019. We suspect it's 2022 before we begin to emerge from there. In 2019, the S&P produced, I think it was $163 in earnings, and we expect 2021 to get to about 162. So we're anticipating that 22 and beyond we resume our upward trajectory. Another point to consider, and this is maybe not great for West Virginia, is that we actually see a lot of opportunity in international markets. We think that, particularly from an investment standpoint, we see valuations are more attractive overseas. Dividend yields are higher overseas. It'll be interesting to see when and how the shift happens to take where investors begin to deploy more capital overseas than they are domestically. At the moment, there's definitely a domestic bias, and I'm not surprised, but I'll be curious to see how that plays out over time. Last slides I'll share are around the presidential election. I think that one of the most common questions we have are what happens? What happens if there's a change of administration? The Republicans, my goodness, if Joe Biden's elected, we're going to sell everything and we're going to be in a catastrophe. And of course, the Democrats, if Trump's reelected, it's going to be terrible. I'm just going to be honest with you. Despite my family and I political interest, the reality is we don't believe the presidential election is going to have a meaningful impact on long-term stock market returns or the economy. Markets perform well under both parties. Monetary policy has a much more significant impact. And the reality is signature legislative accomplishments are so infrequent. It's hard to anticipate when those will happen. And lastly, predictions tend to be wrong. And I think back to the fall of 2016 in anticipation of the presidential election and how surprised we were that evening. It'll be interesting to see how it plays out, but it certainly is not changing my plans and nor is it changing our plans for investing with our clients. And with $1.6 billion in assets under management, we have lots of reasons to be concerned, and we're confident we're on the right track. Another couple points, and this goes back to the issues of uncertainty, is that it's not necessarily a Republican or Democrat that leads the economy and the markets. It's certainty. The market and investors dislike uncertainty more than one party or the other. So we're eager to see bring this election to a close, and we're hoping that within a week of the election night, a victor is declared, and we can make assessments about what, if any, changes to make in our portfolios. I believe this is the absolute last slide I'm going to share, is that as I have shared in recent years, this is a summary of our capital market assumptions and blended returns, expectations for the next full market cycle. And in recent years, these numbers have just continually been declining, and it's not because we're doing anything wrong. It is just we're getting deeper and deeper into an economic cycle, and valuations are higher and higher, and it's making it more difficult to achieve future returns. Which leads me to my point, and I've said this every year for the last several years, is that there are times where the very best returns you will earn are not in your portfolio. And this could very well be the time for you to think about investing in your community. So today, as we work our way through, we're going to talk about the opportunities. How do we deploy capital in West Virginia to create opportunities for jobs, and whether to retain people or attract them? Lots of opportunities there. Why don't we wrap up there? So thank you very much. I don't know if there are any questions. It does not appear. Dallas, are you monitoring this?
Yes, I am.
Great. I don't see any questions unless you do. Why don't I'll give everybody a minute here to propose anything that may be on their minds, and then we'll transition to John.
While people are formulating their questions for the Q&A function there, I just will mention there was a question in chat about the presentations, and I'll be happy to send my presentation out via email to all the attendees later this afternoon. And I assume that's the case for all of the presenters.
Yes, John, that's a great point. Before you send your email out, I'll PDF mine and send it to you, and you'll be able to route it alongside. All right, well, let's wrap up my session, and let's see, what's our favorite 3-digit code? We'll call this one 135. John, take it away.
All right, thank you so much, David. The really interesting national economic outlook. I really appreciate that. Now we'll just go ahead and get right into the West Virginia economic outlook. Somebody unmute yourself just real quick to give me a heads up that you can see my screen.
We can see you. Looks great.
Right.
Well, we see your slide, I should say.
You always need somebody to confirm that everything's working right on the other end. All right. Here's the basic headline for West Virginia. First and foremost, we suffered the fastest economic collapse in modern history. We've had economic collapses of this magnitude before. I mean, in West Virginia, for example, we had a really tough economy in the early 80s. Of course, we had the Great Depression of the 1930s. So we've had economic situations that were as bad, but we've never had a situation where it happened this fast. The Great Depression, for example, took about 3 years for it to unfold, but this collapse happened in 2 months, completely unprecedented. And it's interesting because, a lot of people ask me, oh, do you have good news or do you have bad news? That's of course subjective, but I think generally speaking, I think I actually have some good news. I can say this, that the recovery that we've seen so far here in West Virginia has been stronger than I would have expected back in April and May when the economy was really suffering back then. I think the recovery has definitely exceeded my expectations. We still have a ways to go, but so far we have made a lot of ground. However, that said, we don't expect a full employment recovery until sometime in 2022. The recovery's getting slower as we get closer to where we were at the beginning of this year. And so it's going to take more than a full year left to get back to where we were at the beginning of this year.
Hey, John, can I interject just for a moment? I just got a message from one of our attendees that he can hear you, and I assume this is the case for other participants as well. He can hear you but can't see you or your slides. I can see them, but I'm also a panelist. I'm wondering if I have a different view than a typical attendee. Oh,
Well,
I just got another message from another participant saying that they can see your slides. So I withdraw my concern. It may be, we'll call it user error on the part of my friend, and I'll straighten them up.
Okay. Well, I hope your friend gets it straightened out there. I don't know what the problem would have been there, and I'm concerned about it, but I'll just continue on and we'll let you all figure out that error. We're still working out, even though we've been in this COVID Zoom meeting world for quite a while now, we're still trying to figure out these technical issues. Anyway, I just will say as well that the level of economic uncertainty that we had in the spring was absolutely unprecedented. So much uncertainty. This was new to us. This was unprecedented. We didn't know what was going on. It was an unimaginable level of uncertainty. And even though things have smoothed out to a large extent since the spring, I just want to remind everyone that we still face a lot of economic uncertainty. And so economic forecasts right now come with kind of stronger caveats about the fact that these forecasts are not set in stone. Nobody can predict the future. This is their best guess, but nothing is certain. And I will say that most of my presentation today is actually going to focus on kind of the short-term or intermediate-term recovery for our state and for our region coming out of this COVID crisis. So I'm not going to focus as much on the long-term as I typically do, but I just will say that, in West Virginia and in the Wheeling area, we still have a lot of long-term economic development challenges that we do not want to let slide as we get caught up in this short-term fluctuation. All right, starting out, just look at the statistics around surviving this COVID pandemic. Here's a picture that's kind of worth 1,000 words. Oh boy, you can see the decline in total employment that we've seen in West Virginia here in this figure. Before I even get to this year, I will note that West Virginia actually lost jobs last year. Much of that job loss last year was due to losses in pipeline construction jobs, and so you can see we actually kind of had a negative trajectory even at the beginning of this year. But oh boy, when this year hit, this state lost 94,000 jobs directly as a result of this COVID pandemic. The job loss, and that's over the course of 2 months, over the course of March and April, 94,000 jobs lost. That level of employment that you see there at the bottom took us back to where West Virginia was in the early 1990s. That's how many jobs we lost, took us back to the level of employment from about 30 years ago. But look at the gains that we've made. Since we hit bottom there around the 1st of May, the state has added back about 57,000 jobs. Again, I would not have expected by the end of the summer we would have added back 57,000 jobs. So 94,000 jobs down, and so far we've gained back 57,000 of those jobs. We'll of course go into a lot more detail on the expected continuing recovery here in just a little bit. So this figure shows you the job loss that we suffered in comparison to the nation and in comparison to neighboring states. So the blue bars show you the job losses that we suffered during the real crisis in March and April. And then the yellow bars show you the jobs that we've gained back since we started moving in the right direction back in May. So the 94,000 jobs that we lost translates to 13% of all the jobs in West Virginia, as you see there in that blue bar towards the right. Now here's something that I thought that I would never say. Geez, 13% job loss, it could have been worse. The job loss nationally was actually 14%. And many of our neighboring states, Maryland, Ohio, Kentucky, Pennsylvania, suffered job losses that were worse than what we saw here in West Virginia. So what a strange thing to say, 13% job loss, but it could have been worse, and it was worse in many of our competitor neighboring states. And then the 57,000 jobs that we've added back, that translates into 9% job growth since May. And the 9%, as you see in the yellow bars, looks pretty good as well in comparison to other states and in comparison to the nation. So West Virginia has actually fared relatively well during this crisis. Here we see the unemployment rate for the state and for the nation. The unemployment rate in West Virginia was just under 5% back at the beginning of the year before this crisis hit. We skyrocketed up to 16%. But the unemployment rate has already improved down to just below 9%. So from 5 to 16, and now we're just a little bit below 9. So in my mind, fairly rapid recovery on unemployment as well. This tells the same story. The blue bars show you the jump in the unemployment rate that we suffered during the decline. And then the yellow bars show you the improvement in the unemployment rate that we've seen since May. And this is the same story as before. The 11 percentage point jump in unemployment that we've seen, it could have been worse. It was worse in the nation a little bit, and it was worse in several of our neighboring states, Pennsylvania, Kentucky, Ohio. So again, very unusual thing to say about how 11% it could have been worse. Now this figure shows you the drop in employment by sector. The blue bars show you the jobs lost across each sector of the economy. And then the yellow bars on the right show you the jobs that have been gained back since May. You see on the bottom there, overall, the 94,000 jobs that we lost. The bottom yellow bar shows you the 57,000 jobs that we've gained back. It's no surprise that leisure and hospitality has been the hardest hit sector. That's where we see the bars and restaurants that were really subject to those shutdowns and continue to be subject to shutdowns, or at least reduced capacity in many ways. The trade sector was the second worst hit sector, not hit nearly as hard as leisure and hospitality, but trade was the second sector to get hit the hardest. That's where we see a lot of the retail establishments that were closed down. And oddly enough, education and health was the third hardest hit sector. In West Virginia, education and health is mostly all health. And even though part of the healthcare sector was kind of booming with kind of emergency room visits and in visits with the COVID crisis directly, you just have to remember a lot of elective procedures and all that stuff like dentist office, eye doctor, all those kind of non-emergency medical procedures were shut down for a long time. Thus, the healthcare sector was hit hard. But anyway, every single sector lost jobs in West Virginia during the crisis, and almost every single sector has gained back jobs since the recovery began. The only sector that has completely recovered, at least in terms of if you round at this level, the only sector that has completely recovered has been manufacturing. So that's good, but every other sector has remaining ground to make up. Here's another figure that I show. This isn't something that I typically show, but this kind of captures the essence of the crisis pretty well. This shows the unemployment insurance benefit claims that we see here in West Virginia. Now, before the crisis, back in February, March, we were looking at about 17,000 people on unemployment insurance benefits in the state. And the number, over the course of just a few weeks, the number went to 146,000. went from 17,000 people on unemployment to 146,000 people on unemployment. And you see how that figure has improved really, really steadily since that peak that we saw back in late April. Right now, unemployment insurance claims have fallen down to somewhere in the low 30,000 range. I think that's good improvement. I think that's steady improvement. That's solid. But the recovery is slowing, as I said before. So it's still going to be a while until we get back to where we were before. And even though we've made solid progress, that figure in the low 30,000 range is still about double where we started out at. Let me turn to the Wheeling area specifically here just for a couple minutes. Many of you are probably accustomed to this already for our reports, but just for the purposes of my talk and for the purposes of the Wheeling Economic Outlook report that's available online, we always look at these 4 counties when we describe the Wheeling area. And this figure shows you just kind of how those counties vary in terms of the total number of jobs in each county. Obviously, Ohio, the largest, Wetzel, the smallest, and you see how they fit in there. So this figure shows you the state jobs number now in yellow, but now we have the Wheeling area jobs number specifically in blue. And even before the crisis, you see some volatility there. If you look back to the 2019 numbers up there on the top right, you can see the Wheeling area did suffer some significant volatility in jobs over the previous year. Much of that volatility is being driven by pipeline construction, which has been volatile in many ways and certainly has been volatile up in the Wheeling area. But anyway, for the Wheeling area for this year, overall, we lost about 9,000 jobs in the Wheeling area, and we've gained about 2,000 of those jobs back. The 9,000 job loss was, pretty hard hit to the area. You see there, we started out at about 67,000 jobs. So 9,000 jobs lost out of 67 is a pretty tough hit. And the 2,000 or so that we've gained back isn't quite, commensurate with the state if we look at the proportional recovery coming out of the crisis. Here's the same thing. Here's the same kind of presentation. The Wheeling area now in the blue contrasted against the statewide figure. The Wheeling area started out with an unemployment rate that was just a little bit above the state. We were looking at about half a point above the state or so there when the crisis began. The Wheeling area hit an unemployment rate that was almost 17%, so a little bit above the statewide peak. And right now, the Wheeling area still remains about 1% above the state in terms of the unemployment rate. I just want to mention, there's so many different things to talk about here, and I glaze over so many interesting topics, but I do want to mention that, we've still had some gains. As strange as this sounds, all economic development efforts have not ceased during this crisis. A lot of activity still remains. And the West Virginia, Development Office has still garnered some impressive wins, even this year, even during this crisis and even during this uncertainty. Overall, contracts with the West Virginia Development Office have led to the creation of more than 400 jobs in the state. And there's a couple of those, Williams up in Ohio County. There's another example there in Berkeley County. Those negotiations, those contracts have led to some impressive gains. And I'm happy to see economic development efforts continue even through this crazy, crazy time. So let's talk about the energy picture just a little bit. As you all know, it's impossible to talk about West Virginia's economy without understanding energy. Here's the picture that I always say is, the picture that's worth 1,000 words. Oh boy, there you see what's happened with coal. Just to kind of recap the last decade or so, we started out at 158 million tons at the last peak in 2008. The figure fell down to about 80 million tons in 2016. It improved back to somewhere in the low to mid 90 million ton range over the past couple years. But then this year, coal has suffered significantly. It's fallen from about 93 million tons last year down to a rate of about 60 million tons. So a drop of about 30% in coal production this year as a result of the crisis. We do expect coal to bounce back over the next couple of years, but we don't expect coal to get back to where it was back at the beginning of the year. It has suffered tremendously as a result of this crisis and other factors. With natural gas production has fallen this year, but the rate of decline in natural gas production has been in the single digits. It hasn't been nearly as a dramatic fall as what we've seen in coal. We expect natural gas production to be down through about the next year, but then we expect natural gas production to start growing again, ultimately, at a pretty healthy rate once we get a couple years down the road. With coal, this figure shows you where West Virginia coal goes in terms of coal to electric power generation, coal to exports, and coal to other industrial and commercial uses. You see there how the blue portion of the bars, the coal that goes to electric power generation, you see how it has declined so much. Electric power generation is the main source of the big picture long-term decline in coal production that we've seen over time. But the reason I show this figure is really because I want to emphasize the yellow portion. Exports are a much, much larger part of overall coal production in West Virginia now. And you see how volatile exports have been over the past decade or so. That's natural because the global economy is so big and so complicated. Many export markets are just inherently more volatile than domestic markets. So, the growth that we expect to come back in the coming years is probably going to be through export markets. And really any growth that we can kind of hope for over the long term is going to be through export markets. But just the fact that we're way more dependent on exports than we used to be just means that our coal picture in West Virginia is subject to a lot more volatility than what we were used to a decade ago, or certainly further back than that. This figure just shows you kind of what's happened for coal usage for electric power generation. This figure just shows you in the US, of all the electric power generation that's going on, how much of that comes from coal, how much of that comes from natural gas, and how much of that comes from renewables. And you can see just a really, really dramatic evolution over the past almost 20 years there in terms of where our electricity comes from. Turning over to the gas side just really quickly, the pipeline construction issue is such an important issue for the state overall, and it's certainly an important issue for the Wheeling area. This figure shows you the overall outflow pipeline capacity going out from West Virginia. You see the tremendous gains in construction that we've seen over the past decade or so. But for 2019, the gain was much smaller than what we had seen over the previous year. And we expect for 2020 only a smaller gain as well. With pipeline construction, we had 4 major jobs going on, a couple years ago that are no longer in play. We had 2 jobs that were finished. Just naturally, they were finished, and so the construction's over with. And then we had 2 other pipeline construction projects that were canceled due to various political considerations or other considerations. So we don't expect much more boost from pipeline construction jobs in the near term. We don't expect much more increase in outflow capacity in the near term as well. Maybe that'll change over the longer term, but right now that has slowed. And here's an interesting figure. This isn't for West Virginia specifically. We don't have these data for the state specifically, but this is for the entire Appalachian region. So it also includes Ohio and Pennsylvania. But the blue line shows you the number of rigs in place that are drilling new gas wells. You see the number of rigs is way down. It's gone way down over the past year from a figure that was around 80 rigs in the region down to about 30 now. But on the positive side, the production from each new well is way up. That's what's reflected in the yellow figure. And you see how the new rigs that are being put in place now are so much more productive than what we saw, even 5 years ago, or especially a decade ago. So some contrasting news there in some sense. Let me talk about demographics. This is a point that many of you have heard me talk about before, but it's such an important issue, I just can't not talk about it. So I showed you the unemployment rate before. Unemployment is a problem right now, obviously, with a statewide rate of nearly 9% or a Wheeling area rate of about 10%, then clearly we have an unemployment problem. But unemployment is going to get back to normal. But even when unemployment gets back to normal in a couple of years, we're still going to have this long run problem of labor force participation that has really been plaguing our state and our region for a long, long time, decades. So remember, labor force participation is a complementary measure to the unemployment rate. Unemployment captures, among everyone who wants to have a job, how many people have a job now versus how many people are just looking for a job. But the labor force participation rate is much more fundamental. It's much more long-term than that. Labor force participation captures within your entire adult population, how many people want to work in the first place. Never mind whether they have a job or not, never mind the short-term macroeconomic fluctuations, but how many people want to have a job in the first place. Nationally, the figure is 63%. In West Virginia, as you see, we're dead last among the 50 states with a rate of 55%. So here we're lagging the nation by 8 percentage points in terms of the share of our adult population that wants to have a job. I've said for a long, long time that this is the biggest long-run economic development impediment that we face in West Virginia. We're never going to have the levels of economic prosperity that we hope for if we have a full 8 percentage point, a full 8% of our population sitting on the sidelines compared to the nation. So we have to get more of our people in the workforce. That gap that you see there, that deficit, is driven by 3 factors primarily related to human capital. First and foremost, you have people who would like to work in a perfect world, but they don't have the right education and training and job preparedness, so they don't look for work in the first place because they know they're not going to get hired because they don't have the job skills. Second, you have people who would like to work in a perfect world, but they're too unhealthy to hold down a job. They don't even look for work in the first place because of some health problem. And the third issue is drug abuse. As you all know, the opioid crisis was really tough in West Virginia, and there's some data to indicate that drug abuse has worsened during this crisis due to a variety of factors. So poor education, poor training, poor job preparedness, poor health outcomes, poor drug abuse outcomes are keeping West Virginians out of the workforce. That makes our state less attractive to potential businesses that might think about locating or expanding in West Virginia or starting up in West Virginia. This is a real economic development impediment. So even though we're focused on the crisis and making it through the crisis right now, we cannot lose focus on improving these human capital outcomes over the long run because it is such a fundamental driver of economic growth over the long term, and it will be in our state. It'll be an important driver if we can improve it, or it'll continue to be an important impediment if we don't address this problem. And here the yellow line shows you the labor force participation rate for each of the 4 counties within the Wheeling area. The good news is Ohio County actually has a much higher labor force participation rate than the state overall. That's a good thing. Belmont County is a little bit higher than the state as well. Of course, Belmont's over in Ohio, but it's a little bit higher than the West Virginia labor force participation rate. But even though they're higher, even though Ohio's substantially higher, the rate there is still lower than the national rate. So even Ohio County has room to improve. Marshall and Wetzel County come in with lower labor force participation rates. So for those counties, the issue that I just raised is even more significant. Now, where do we go to here? Our economic forecast. I will say this. Economic forecasting, it's always tough. It's always tough to predict the future. And economic forecasting a lot of times does well. Our forecasts in the past have performed well on many occasions, but it's never a certainty. But right now, economic forecasting is far, far, far more difficult than normal. I mean, the thing is, when we have a recession, in every other recession, at least in the modern period, the recession has been driven by some economic problem. That kind of makes sense, right? Economic problem arises, leads to a recession. Economists study that problem. Economists study how the economy evolves, and economists kind of make forecasts on how we're going to improve. But here, this recession wasn't driven by an economic problem. The economy was strong back at the first of the year. It's not like we didn't have any problems at all, but the big picture statistics like the unemployment rate, like the job growth figure, those statistics looked good, right? This economic recession came completely out of left field from a public health matter. So, we're trying to make forecasts around economic growth when fundamentally the problem and the recovery depends heavily on issues in public health, not issues in economics. So that, divergence there between kind of the cause and the effect, the economic catastrophe caused by a public health concern, that's making forecasting so much more difficult. So there's all my caveats for you before I present our forecasts. Here's just a stylized diagram. I mean, everything on the right-hand side of that figure is just made up. The left-hand side of the figure shows actual data, but the right-hand side is completely made up. But I just wanted to show you kind of the way in which people think about recoveries. So the most optimistic type of recovery is a V-shaped recovery. You see the blue line there. It's not hard to imagine where the term V-shaped comes from. It looks like a V. V-shaped recovery is when you kind of fall into a recession quickly, but then you bounce back and you recover from that recession pretty quickly as well, leaving a V. A W-shaped recovery is when you start to make progress, kind of like a V-shaped recovery, but then some catastrophe hits again and you fall right back down into what is essentially a second recession. That's a W-shaped recovery. An L-shaped recovery is essentially no recovery at all. L-shaped recovery, the economy suffers and it just doesn't show any improvement. It just goes right along where it was at the bottom. And then this looks like a check mark, the way that we've kind of done the graphic design here, but a lot of people refer to this as a Nike swoosh shaped recovery. And a Nike swoosh shaped recovery is just a long, slow recovery, essentially. So I can tell you, there were pessimists back in, April and May who were calling for an L-shaped recovery. I was not one of those pessimists, but I know of some. And the data already have disproven that. We're not going to have an L-shaped recovery. We've already added back 57,000 jobs. Some pessimists also were calling for a swoosh-shaped recovery. I think we've already made it past that as well. I'll just tell you this. We are essentially calling for a V-shaped recovery. We think we're already well into that V-shaped recovery, and we think that's what we're going to continue to see. So based on the analysis we've done, based on air forecasting in conjunction with some national forecasting groups that forecast the national economy, we're expecting a V-shaped recovery. So overall, here's what we expect. This isn't a stylized diagram now. This is what we actually expect. You see the jobs that we've already added back, which is putting us well into that V shape already. And we're expecting basically continued steady job growth through sometime in 2022. Now, again, the recovery is slowing as we move forward, right? We're not going to recover at the same pace that we saw back in May and June and July. The recovery is definitely slowing, and that's understandable. And we don't expect to get back completely to where we were until sometime in 2022. But overall, it's a V-shaped recovery. I will point out, though, that we do expect some stagnation for a while after the recovery finishes. As you see in the later years of the forecast there, we're really expecting some stagnation for the state overall. So again, all the more reason to emphasize the need for improving human capital outcomes and in pursuing other economic development efforts that are focused on the long run, even while we fight through this short run crisis. I will say, however, here, usually we just present one forecast, but given the nature of the uncertainty, we've actually put out an optimistic scenario and a pessimistic scenario based on some assumptions that we think are reasonable at the national level in terms of how the crisis unfolds and in terms of how the national economy unfolds. So the green line, our optimistic forecast, is what we think is our best case scenario under reasonable assumptions, and the pessimistic is what we think is a worst case scenario under reasonable assumptions. So you see that we're really putting kind of a wide band on the overall picture. If the optimistic scenario unfolds, we could achieve full recovery by sometime next year. On the other hand, if the pessimistic scenario unfolds, it could be a long time until we get back to where we were at the beginning of this year. We don't think that's going to happen, but it is within the realm of possibility based on the overall level of uncertainty that we see. Here's kind of the similar figure for the unemployment rate. basic idea is that we expect the unemployment rate in West Virginia to get back to where it was at the beginning of the crisis by sometime in 2023. We think it's going to take 2 more years to fully get back to that 5% that we saw at the beginning of this year. It can happen a year sooner if the optimistic scenario unfolds, or it could take an extra year if the pessimistic scenario unfolds. But overall, we're calling for a full recovery in unemployment by 2023. And this shows you the employment change that we expect by sector. It's also showing kind of the band of confidence there from the optimistic and pessimistic. But this is the growth that we expect by sector from the beginning of this year through the beginning of 2023. Overall, if you look at the total in the middle, your baseline forecast calls for some net growth over that 3-year time period. We could have up to 2% net growth over that period if the optimistic scenario unfolds, or it could be negative 2%, no growth at all, but we could still fall 2% short of where we were if the pessimistic scenario unfolds. Down at the bottom, with the 2 sectors, retail plus leisure and hospitality, we actually expect those sectors to not recover over the 3-year period. We expect those sectors to still be down by more than 2% after the 3-year period has ended. Again, retail, leisure, and hospitality has been the hardest hit, so we think it's going to take a long time for those sectors to recover. And you see the green bar there for the pessimistic scenario. It just occurred to me, why would we use green for pessimism? But oh well. You see there for the pessimistic scenario under retail and leisure and hospitality, those sectors could still be significantly down by the end of the period if the pessimistic scenario unfolds. And even in our most optimistic scenario, we expect very little improvement in those sectors. But as you move up, manufacturing looking much better, education and health looking much better, natural resources and mining, mostly driven by gas, looking definitely better as well. So there's a lot of sectors that are improving, but the point is the retail and leisure and hospitality are not going to recover most likely in the 3-year window. Now turning to the region specifically, the blue bars show you what we've seen for each of these geographic areas over the past decade, and the yellow bars show you what we expect for each geographic area going forward. For the state overall, down at the bottom, we expect growth of around 1% overall from the beginning of this year through the beginning of 2025. We expect 1% growth overall. And actually, we expect Wetzel, Ohio, and Belmont counties to all overperform compared to the state. I think all 3 of those counties will exhibit stronger growth over the period. So that's the good news. That's good news. We think those 3 regions are going to do better. But by the same token, you see the U.S. is up at the top. We think the regions are going to overperform the state, but we think those 3 counties are going to underperform the nation. Now, Marshall County is down there at the bottom. We don't expect such strong growth in Marshall County, but Marshall County has been an outlier over the past decade. Marshall County has exhibited tremendous growth over the past decade. So it's kind of natural that growth would slow. That's kind of the natural trajectory of how economies move. So not as much growth in Marshall, but that's coming off of a really strong decade. So it's understandable in a lot of ways. And then here's the forecast that we expect by sector for the Wheeling area. We expect professional and business services to exhibit the strongest growth due to a variety of developments there in the area, and professional and business services that support the gas industry as well. Even though sometimes you have something that's driven by gas, there are various professional services that support that industry. So the gas industry and the continued growth there will boost the professional and business services sector. Then anyway, otherwise, we expect natural resources and mining to continue to show strong growth going forward. Other services, leisure and hospitality for the area, financial activities are all growing faster than average for the area. Manufacturing will continue to grow for the area based on a baseline standard forecast that we see here. We have a lot of potential to boost manufacturing above the forecast through economic development efforts if we are to make those successful. But the forecast, the numbers as we see it now, call for improvement in manufacturing, and that's improvement, but improvement that's slower than the overall statewide job growth. But even that is a big turnaround from what we've seen over the last decade, the declines that we've seen over the last decade. And we expect construction to continue to grow as well. But the growth in construction is going to be very modest compared to the tremendous growth that we've seen over the past decade. Here's the unemployment rate. The blue bars are the unemployment rate for the Wheeling area. The yellow bars are the unemployment rate for the state as a whole. We do expect unemployment for the Wheeling area to be higher than what, or let me say, to continue to be higher for the state. I'm sorry, I'm getting tongue-tied here at the end of my time. We expect unemployment for the Wheeling area to continue to be higher compared to the state for at least the next couple years. But that said, we expect continued steady improvement, and we expect unemployment for the region to get back to normal, maybe around 2023, maybe around 2024. It's going to take a while before we completely get back to normal, but we'll see steady improvement for sure over the next couple years. So that's the forecast. I have stopped screen sharing. I don't have much time, but I'm happy to take a couple questions if
John, there is one question for sure. I observed a question. The question was, as jobs return to West Virginia, are they anticipated to be in the same sectors that they declined?
Well, not really. I mean, the biggest driver of the decline was leisure and hospitality and retail. And, you know, those sectors are adding back some jobs, but they're not going to get back to where they were. You know, so it's not going to be a complete 1-for-1, right? I mean, the economy 3 years down the road is going to have a different composition across industries than what we saw, than what we saw at the beginning of this year. I mean, it's not going to be vastly different, but leisure and hospitality will see long-term losses, in other sectors like professional and business services, like education and health, like manufacturing, will see gains. So it'll be a different composition.
Good. John, that may be it. I don't see any other questions. Thank you very much.
Well, but we better turn it over to Mark Mukow for a few minutes. He is with us, and we better turn it over to him for 10 minutes before we proceed on to the two panel discussions.
Very good.
Mark, are you ready to go with your screen sharing and unmute your mic? Well, we're waiting on Mark to unmute. I did see a question actually from Ryan come up in the chat. What are your thoughts on the Virgin Hyperloop? I'll tell you, my thoughts are that is awesome. That is so awesome. And our economic development leaders did a great job of marketing West Virginia for that. And the thing is, we have to look for creative outside the box solutions that fit into our comparative advantages. And so with that Virgin Hyperloop, you know, they already have a small testing center out in Nevada, but in Nevada, it's flat, it's dry, there's no rain, there's
Uh-oh, looks like John has gotten frozen up. In the interest of staying on, oh, he's back.
Oops. So they could really do the testing center with the kind of terrain that we have. So the Virgin Hyperloop thing was fantastic, and it really played to our strengths. And it's going to be a really important benefit for all of West Virginia, I think, but especially for Tucker and Grant counties. And I would just cite that as a perfect example of the kind of thing that we have to keep fighting for and pushing for other parts of the state. But I'm really excited about the Hyperloop. Mark, you're off mute now, so perfect timing.
Yeah, I'm off the mute, and I'm trying to get my presentation up here.
Okay. We're ready for you whenever you're ready.
I'm having that same problem I had the other day where I can't get my I cannot get the screen to come up right.
Oh, daggone.
I need to figure out how to do that.
So
should we go ahead and go to the panel with Greg and Danny?
let's go to the panel. We'll come back as I do want to make sure we stay on time and keep rolling. We got a tight schedule. I appreciate everyone's patience, by the way. We're trying to compress into just 2 hours what we normally do over 4. So just got to keep moving. Mark will come back to you for sure. Let me just say we're turning to called the second half of our event. And this is those that have attended in recent years, you know that of course, we're bringing together this economic context, but we also want to talk about specifically what's happening in the region. And in this particular area, in recent years, we've talked about the importance of both natural gas and coal. How do we strike a balance between these two energy sources and their contributions to our economy? We talked about why this region is so attractive for ethane crackers, and we're still optimistic that that's coming together. We talked about the downstream manufacturing opportunities, but along the way, we consistently talked about that point that John Deskins pointed out, the workforce participation challenges. And so we've been spending more and more time thinking about how to address that. Last year, for example, we focused on strategies. How do we retain and educate our young people? And we talked to Natalie Roper from Generation West Virginia and Sarah Armstrong Tucker from the Higher Education Policy Commission, and all the ways that our institutions of higher education can prepare a workforce with very specialized training. Excellent information. This year, we're shifting gears a bit and thinking about the longer term trend that we've observed. The West Virginia is a great place to live and low cost of living and proximity to so much of the United States population. But COVID-19 kind of amplifies that. And the acceleration of technology investments, which we spoke of earlier today, and thinking about the healthcare concerns people have, and as we've often joked over the last 7 months, that West Virginia's been socially distancing since 1863. So we've got lots of things going in our favor. This morning we're gonna speak to two folks, or I'm not sure if it's Greg or Danny, or Greg and Danny. Greg, Danny?
It's an and.
Okay, good. All right. So this morning we're going to speak to Greg and Danny, Greg Corio and Danny Twilley. Those that have been monitoring the news, October 5th, there was a really important announcement made in West Virginia. We see all the things we talked about, we're attractiveness here, but in what ways can we incentivize that action? And I don't want to steal any of their thunder. I'll just say that Greg has been for years at WVU and headed up the outdoor recreation program, which initially was designed for students. How do we engage students that are coming to West Virginia and introduce to them the wild and wonderful experiences that we've all grown to love and appreciate? And along the way, they created some great students. They improved their graduation rate and really instilled a love for West Virginia among the graduates. Danny Twilley is a little more recent addition to WVU, but he's primarily there to help kind of roll out this outdoor recreation program. How do we attract people to the state, remote workers? I don't want to take any more of their time. I know they've got a lot of important things to share with us. And I'll just say that Wheeling, while we don't necessarily think of wild and wonderful, whitewater or rock climbing, when you're within an hour, you're a heck of a lot closer than if you're living in San Francisco or New York City. So I think we've got the best of all. Culture, arts, education, bandwidth, access to international airports. I mean, there's so many things that Wheeling has going for it in this experience. So as we speak to them, be thinking about the things that we can do to build on this program that's going to be rolled out over upcoming months. Greg, I hand it to you.
Yeah, thank you, David. Good morning, everyone. Little background: I grew up in Taylor County, grew up in Grafton, right on the Tigard River. I've been at the university about 16 years, and over that time frame, I've been bringing students from out of state to West Virginia and seeing our in-state students, showing them the beauty of our state. And we grew the program from just 1 person to 12 people. Every dollar WVU invests in the program returns $10.60 back to the institution because 6-year graduation rates go up. But during that time frame, as I'm showing off this state, I hear from people that grew up in Boulder, Colorado, that our doctors could live anywhere in the country, who choose to live here and will say that we have better access to outdoor recreation than Boulder, Colorado. You're going to hear some of the data that we're going to talk about at a national level. And basically, I saw an opportunity for West Virginia for us to capitalize on how this isn't a tourism play. That tourism's a piece of it. A good place to visit is a good place to live. This is about how do we leverage our outdoor recreation assets, given the quality of life that you can have here in West Virginia to attract talent and businesses to come to the state. And so one of the first things I did was I hired Dr. Danny Twilley, who's on the call, and really was the only faculty member who I have seen really working in this space, thinking about community development, outdoor recreational assets. And the beauty is Danny's been coming here for 20 years, recreating in West Virginia, and I couldn't get here fast enough. So I want to introduce Dr. Danny Twilley.
I just want to dive right into this, but thank you so much for that warm introduction. I'm excited to be here. And like I said, I've spent 14 years as a faculty member in Southeast Ohio at Ohio University, but I've been coming here with my family, myself, and bringing students to the great state of West Virginia. And as I, started looking at other areas and throughout the country that were leveraging their outdoor assets for economic development, when Greg asked me to come support this work, I couldn't be more excited. So let's dive in.
That sounds great. Thanks, Danny. As he's bringing that up, we're going to share with you some national data, these national trends. We're going to talk about West Virginia assets in the middle under outdoor recreation. Then we're going to talk about what we're doing with the big Brad Smith announcement on October 5th and remote workers near the end. But let's talk about the national trends. And this was really, I've been thinking about this space for a long time for West Virginia, and it really started with the Outdoor Industry Association doing a report on how big is the outdoor industry in the United States. And this is a comprehensive view. This is manufacturing, jobs. This is everything from skiing, hunting and fishing, bicycling, skateboarding, all of that. It's an $887 billion industry in the United States. It's as large as motor vehicles and parts combined, as well as pharmaceuticals. And you can see this chart here under the economic sector. And so there's continues to be data out there that this is a huge piece, and it's actually growing across the United States. And we'll talk about how it's growing here in a second. And so as this data, that article really started this whole wave of research on the economic benefits of individual sports. For instance, rock climbing is a $12.4 billion industry. When we look at states, let's look at what's been happening across the United States with the outdoor economy. And really, Utah was the first state that created an Office of Outdoor Recreation in 2013 because the outdoor industry was so huge there. They're like, wow, we have this multi-billion-dollar industry in Utah, and I forget how large it is exactly, but we have nobody really representing it across all sectors. And so they created the first office in 2013, followed by Colorado in 2015 and Washington in 2015. But the U.S. Bureau of Economic Analysis from 2012 to 2017 did a survey to look at how much is the outdoor economy growing state by state. National average is 16.6%. But when you look at Colorado, they're at 30%, followed by Utah, 29%. You can see Washington's up there, 27%. Something really special is happening out there, and you can see it, you can feel it. When you look at the states around West Virginia, Ohio grew at 10%, Kentucky 13%, Virginia 16%, Maryland 15%, and PA 16%. West Virginia grew at 1%. We were 49th out of 50 states. We outdid Louisiana. Kansas was just above us, and they grew at 2%. What excites me about that is that we are, and we can show you in our data, that we are sitting on the best outdoor resources on the East. We just haven't turned them on in the right manner to really grow the industry, to grow the opportunity that we have ahead of us. And so, so let's talk about business attraction. All right. So this past September, I can't see it, Danny. I don't know if is it on? There we are. This past September, I went out to Utah. University of Utah brought me out because they wanted to learn from our WVU Adventure program. And I met with Doug Owens, whose father was a congressman in Salt Lake City for several terms, and they ended up studying the 50 fastest growing tech businesses from Ogden to Provo. They call that the Silicon Slope. And they're having tech businesses move in there at a fast rate. Their population is expected to double in the next 30 years. And so the Silicon Slope, so they wanted to look at the tech businesses and how did outdoor recreation fit in their decision to be there? And how did it factor into the success of their program? The second biggest reason that they chose to be there was the fact that the CEOs, the owners of the companies, wanted to live in a place that they had access to skiing and climbing in the beautiful national parks of Utah. The number one reason was being able to attract talent. And so what they said was they were able to leverage their outdoor recreational resources in Salt Lake to attract the talent and steal them from Silicon Valley, because young people wanted to go out in increasing numbers to go skiing and climbing and biking and use the beauty of their outdoor recreation. So they're using their outdoor resources to attract people there. I will also say that they're not sustainable. They don't have water. There isn't enough water right now getting to the Great Salt Lake that it's going down. They have serious air pollution problems because they get the inversion because of the mountains. And so they are going to be capped out on how much they're going to be able to grow in that area, given the fact that they are getting drier. And we are water rich as a state.
So there are other communities out there that are doing this that are a little bit closer. So you got Roanoke. Roanoke, part of their Outside Foundation, has a trail where it's a webpage that talks about where trail meets trade. So again, they're trying to create this idea of business development, of business and the outdoors. How to locate your business here. If you go down on this webpage, they have a video about 3.5 minutes long that shows someone leaving their driveway on a bike and biking through the downtown area to the museums, the food, the ballparks, all of that. And it's all centered around this idea of the quality of life that you could have. You know, you look at places like Duluth in the late 80s when GM left, it kind of put that community on its heels. It got to the point where someone actually put out that billboard, well, the last one leaving Duluth, turn out the lights. They started investing in outdoor recreation infrastructure, and it's been one of their key development strategies for that community. Another kind of the most recent player in this space has been Northwest Arkansas and Bentonville. We all know that area for Walmart. But one of the things that's really interesting is that as that company really started to grow, they were having to recruit the talent from Houston, San Francisco, Chicago, and New York, but they were struggling to keep them there because it was missing the food, the art, the culture, and the recreation that these young individuals wanted. So they started thinking about, how do we do that? How do we create that? Well, a lot of them have houses in these high mountain towns of Colorado, and they kept thinking about, man, there's vibrancy in these small remote towns in the middle of nowhere, but people want to live there. So they have the food, the art, and the culture. So they said, how do we create that here in Northwest Arkansas? So again, Crystal Bridges Museum is obviously a big anchor point. They started doing some really interesting development by redeveloping in their town square and in supporting businesses being on that town square. And then the two grandsons, Tom and Stuart, were really into biking. And so they looked around and they said, well, we don't have skiing, we don't have climbing, we don't have whitewater, but we do have land. So we started putting trails on the ground. They did that in 2010, started really taking off in 2013. Fast forward, and one of their secret sauces, and we'll talk a little bit about it later, is they integrated the trails throughout the community, so where you could access it from town square, throughout their and throughout neighborhoods. And so fast forward 2018, it was ranked one of the top 5 best places to live. And this past year, it was ranked as one of the 5th fastest growing areas in the entire US. And the interesting part is that growth is 5 or 6 degrees separation from Walmart. And then finally, now between Fayetteville and Bentonville, you have Rogers and Springdale. Those areas are starting to grow. So again, it's starting to have this rising tide effect. So again, we start looking at other kind of baseline assumptions here. And so this one was the one that really turned my head. It's the generation born between 1980 and 2000 is outspending Generation Xers, baby boomers, on things like travel, activities, and sports. Why that's so powerful is that Generation Xers, they tend to be kind of that mid-career, late to career. They tend to have, typically disposable income, time, may or may not have. Baby boomers tend to have time and money, but they're being outspent by the generation between 1980 and 2000. Their early career, starting families, going back to grad school, potentially have a little bit more debt. And they're outspending those who have time and money. What that starts to indicate when you start looking at this idea from the Brookings Institute that people are moving west in pursuit of an experience-driven lifestyle. There's a value shift. People are starting to think, where do I want to live first to have a quality of life and work second?
Well, that fits in. So being at the university so long, unfortunately, I've seen a lot of our youth leave our state. I've seen a lot of our graduates move to places like Colorado and Utah. Danny, we go back to that overall picture, but when I think about what we have in West Virginia, we can dominate in this space on the eastern United States. From a whitewater perspective, you'll see in a few minutes, we can dominate on a national level. But with 4,500 caves, we have the best rock climbing state, I would argue, on the East Coast. That picture in the upper middle, that guy drove down from Vermont. And I want to tell you the story. So I was doing a service project with Adventure West Virginia at Cooper's Rock. And I was sitting at the table. We had 140 students out there working on trail work and picking up litter and working in the climbing area. And this group of climbers came by, and I said, "Oh, this is our service project. Where are you guys from?" And they said, "Toronto, Canada." They had driven 7 hours to Morgantown 2 weekends in a row because they couldn't believe the bouldering was so good. That picture in the upper middle, people were driving, that guy drove from Vermont to climb that one boulder outside Morgantown. The New River Gorge is one of the most famous climbing spots in the United States. It has high quality rocks. Our whitewater we're really known for. And in this past year, we just had the World Cup in West Virginia. And so we're people from around the world in West Virginia recreating. This past year, I worked with a student, this map in the upper left, and we looked at all the climbing gyms in the major cities outside of West Virginia. And if they offer trips, where do they come? Almost all of them come to West Virginia. So Morgantown, Seneca Rocks, New River Gorge really are the hot spots for climbing in West Virginia. Franklin's getting there. Franklin has a lot of opportunity in Pendleton County. So let's look at this whitewater density map. So we took every whitewater run in the United States, this is the map in the upper right, and to look at where we sit with density of whitewater. We have hands down the greatest density of whitewater in the country in West Virginia. I never knew that. I knew that we could always choose, you want to go to this river or that river, but I didn't understand how unique it is to have that. So if you're a whitewater kayaker and you live in the United States, we should be attracting all of those folks to come to West Virginia, but we want to take it one step further. So we're working with a researcher, this chart down on the bottom right, and looking at the total number of runnable days. As the West is getting drier, we're getting wetter. Unfortunately, so many people in California, in Oregon, and right now Colorado, they're dealing with the dryness and they are expected to get drier. We are wet, we have water, and someone, former chief of staff of one of the governors shared with me that we're water rich as a state, and that's always stuck with me. So when we look at the rivers and look at a 10-year average on the total number of runnable days, for example, the Cheat Narrows outside Rollsburg in Preston County runs 76% of the year. There's 280 average days per year it's runnable. The lower Big Sandy, a world-class run in Preston County, 49% of the year, 180 days. The Upper Yaak in Maryland, 56% of the year, 205 days. The Lower Yaak, which is in a 30-mile radius of Morgantown, runs 100% of the year. We're now moving into the New River Gorge region. We're looking at the total number of runnable days, 100% there. When we look at the total mileage of whitewater compared to towns, so within an hour-and-a-half drive of Boise, Idaho, which is known as a whitewater town, by the way, they have 98 miles of whitewater. When you look at Boulder, Colorado, big outdoor town. They have 122 miles of whitewater. And by the way, Boulder Creek and Boulder runs an average of 25% a year. So a small percentage a year it's runnable. When you look at Morgantown with an hour and a half drive, 605 miles, Beckley 820 miles, Elkins 875, Thomas Davis 1103. The researcher doesn't think he can find another town in the country, outdoor town, that has access to more white water than Thomas and Davis. When we overlay and what our office is doing, you can see this map down here in the bottom left. We're basically looking at what towns, what do we have, and how does it compare? So people are moving to Asheville for that outdoor driven lifestyle. But I will tell you, their inner rings, what is in their inner rings isn't very good. So it's actually, so give you an example, Morgantown, within a 10-mile radius, we have over 500 established rock climbing routes. Fayetteville, they have 2,500 climbing routes. Asheville doesn't have any. It's actually a 39-minute drive to two boulders, the closest climbing to downtown. Their outer rings are really good because they start getting into Pisgah and Nantahala National Forest and the national parks, but their inner rings aren't very good. But we can compete in this space and potentially win in quite a few of these areas.
So when we take a look at this from an economic standpoint, there is report after report talking about the economic value that is associated with these activities. Now, going back down and trying to do a little bit of comparison here is that we understand that, you know, from jobs in the outdoor industry, we're 45th. Reminder that we're 49th in terms of growth. But when we take a look at the Monongahela, the New River Gorge, and the public land around Morgantown, we're about 1.1 million acres. When you compare that to this study that the studies that came out around Nantahala and Pisgah National Forest, they have about 1 million acres. So at least from a comparative standpoint, is what they found between rock climbing, mountain biking, and paddling, both commercial and non-commercial, is that visitors were spending $83 million a year in that area, with Western North Carolina's adding an additional 30 million, but it was providing over 1,000 jobs. And so they did the same exact kind of study, but they added hiking when they went out and looked at it in Colorado, and they added an additional 24 million. But one of the things I think is important is that's almost 3 million acres. So it's not about acres, it's about access, right? And those forests, you know, in Colorado are really far removed, where, you know, the ones in Western North Carolina are accessible. Our area is accessible. We have population. They want to come to West Virginia. And so we can absolutely do very well in this space. So how do we do that? So how do we start working on providing access? And so that's one of the things that our office is working on, is around this idea of asset development. And so what we're starting to look at, again, as Greg, you know, talked about, we're doing that comparative in terms of that 60-minute or that 30, 60, hour and a half range from where you are. Why that's so important is because that's what you can do before work, after work, on the weekends. You can go grocery shopping in the morning, go climbing in the afternoon. We're also then looking at supporting amenities, these ideas of what amenities do they have? These are things like the coffee shops, the breweries, the local shops. And so what we're doing is starting to think about how do we create assets that are accessible. And accessible means two things to us, is that when you pull into a trailhead, that you know it's the trailhead, that it has good parking, that you know you're supposed to be there, you feel welcome. In addition, you'll have trailhead signs. And then you have good put-ins to our rivers, good trails to get to our rock climbing sites. And then we have good mountain biking and hiking trails as well. So that's one way we're looking at access. The other way is we've been blessed with topography. So how do we then lower the barrier to ensure that we have good beginner-friendly, family-friendly, up into intermediate access points for all these great and amazing outdoor assets. So we're really thinking about that infrastructure development as part of our work.
Yeah, let's talk about some of the trends with that COVID had brought about. Pre-COVID, Danny and I were flying back from Dallas with President Gee and Javier from the business school. We stopped in Huntington and saw Brad Smith speak with the CEO of eBay and PayPal. And so he talked about 25% of Silicon Valley workers are remote workers. They could work anywhere in the country. And he talked about Tulsa Remote, which basically the average salary Tulsa saw was $105,000 and a 90% retention rate with the people who participated in that program. They built a $480 million park. And Danny and I were discussing how do we really, how do we leverage the outdoor economy? And oh my gosh, if they're doing it with whitewater rafting in Oklahoma, he has no idea about the assets that we're sitting on as a state between rock climbing, our skiing as a part of that, our caves. What resources give us that sustainable competitive advantage? To quote John Chambers when he saw this presentation, he's like, you need to focus on that. This is, other towns can't replicate what we're trying to do here. So post-COVID, COVID hits, you can see report after report coming out about more workers are going remote. Post-COVID, they're expecting 50% of Silicon Valley workers to be permanently remote workers. And so how do we leverage that trend? And so we will talk a little bit about what we did, but we did learn from Tulsa Remote Shoals. We also looked at Vermont Outdoors, which was the Vermont remote program, which was really statewide. What we found and what we are focused on is creating, this is a retention program, not just a recruitment program. How do we bring workers, bring our youth that have left the state back to West Virginia? And really belongingness is really key. And I will say, you know, in growing adventure West Virginia, the reason why our 6-year graduation rates at WV are so much higher with participants is because we build that sense of belongingness and community, and we show off our state and people feel really proud to be here. So let's do this and give that West Virginia welcome to these remote workers. And one of the things Brad said when we were presenting this to him, and he's like, if the workers are here, the companies will follow. And so we want to give a lot of attention to West Virginia in the near future in attracting remote workers. Danny?
Yep. So how we're going to do this is all around this idea of West Virginia, like live where you play. And we're building out this idea of community, purpose, and the outdoors. So what the program kind of looks like at a high level is that we're looking at it from it's a 2-year program. There's going to be a financial incentive. That's not what drives them. It makes it easier for them. But we're going to do a welcome orientation trip based on the Adventure West Virginia model. We're going to do socials and outings with these individuals to really connect them to each other and to the community. So this could be monthly. We're going to go on outdoor trips with them. Hey, bring your family. We're going to go on the bike path. We're going to do a river paddle. We're going to go climbing this weekend. We're going to do festivals with them and films. We're also going to be providing them with access to equipment. So, hey, Greg, I know you're a climber. I don't climb, but I really, now that it's right out my back door, I'd love to learn. Can you take me? Greg's going to say, yeah, go grab some equipment from that closet, and we'll go out and do it. We're going to provide co-working space. The co-working space is so important to this recipe because it's that place of gathering. It's a place where they can connect and get that community feel. Even if they're not all working for the same company, they still can connect to each other and share stories of their adventures. Again, building off the idea of spurring entrepreneurial growth is for some of these individuals, they're going to want to start their own businesses. We can plug them in to do so. And then as this trend continues to grow around remote working, is ensuring that they have the training and certificate and understanding in how to lead others as remote workers and be better remote workers themselves. I've already talked about the asset development, but just to make a quick point on that is that we're going to be helping develop assets in coordination with this program in order to ensure that we continue to take this great canvas that we have as West Virginia and enhancing it to create access, as we talked about earlier. And then, and then finally, this idea of ROI. And this was some of the things that John Deskin's office and his team helped us with. But really what I want to really point out here is that we did this direct ROI. That's for the 2 years that they're in the program, using a 0.6 propensity to spend, but in using a tiered salary approach. and we did 50% retention. That's going to be our baseline retention idea, is that we can potentially see up to 148 million. Tulsa saw $105,000 in the average salary and 90% retention. That was in a one-year program. COVID could have played into some of that retention. We don't know, but we could potentially see almost $440 million in ROI. But really what I want you to look at is salary is not the indicator here for us, because when we increase retention, that's where we go. And our retention numbers are based on this idea is that after the second year, then how many people stay for year 3, 4, 5 when they're no longer in the program. And so that's why this is based on a retention program. This isn't about marketing. This isn't about recruiting. This is about getting them here, having them fall in love with West Virginia, and having them call this home for a long term and raise their family here if that's part of their life plan. So that's what we're up to. I think we'll stop there because we're getting there, and I know some of you probably have some questions for us.
So we'll remind everyone of how to answer or how to pose questions. There's a Q&A function within the Zoom. But while we're awaiting those, and I'll use this as kind of a transition point as well, is, as you think about the infrastructure, I mean, this is a call to action for the Wheeling area. The Wheeling area business community. What can we be doing? Specifically, what could we be doing? And some of the things that I'm not sure that I'm not sure that Greg and Danny addressed this explicitly, but in our prep conversations, it seemed obvious. Housing, apartments, single family homes, shared offices, restaurants, shopping. What are the amenities that a community needs to really attract? And it's ultimately going to be up to us. How do we deploy capital? How do we create an environment that attracts people? As I said, 30 minutes ago or so, I mean, the beauty of Wheeling in particular, proximity to 2/3 of the United States population, access to transportation out of Pittsburgh Airport, Columbus Airport, Interstate 70, Interstate 79, Interstate 77, consistently good broadband internet access, low cost of living, $125 a square foot is competitive with all these markets in a meaningful way. So it's pretty exciting, and I hope that we can prepare ourselves. Danny and Greg, I still don't have a question. I apologize, but I have gotten outside of this some text messages from the friends that I know in Wheeling that are absolutely loving this. They know this is an interesting opportunity and are thankful that you're presenting to us today. Last call. Questions for Danny and Greg? Going once.
Thank you.
You bet. Thank you, fellas. Mike Green. Are we ready to queue up here? Let's think about how we're going to fund all this development. How do we respond to, and actually the number, I believe, I don't know if Greg and Danny talked about it, but Brad Smith, the former CEO and current chairman of Intuit, I think it's a $25 million grant to fund all of this activity. So how do we, in a similar way, commit that through our private investments? Mike, just make sure you're with us. Can you hear me? And can you turn your video up?
David, can you
Excellent.
hear me okay?
Yeah, I can hear you now. Perfect. So Mike Green heads up Mountain State Capital, but has a storied history in technology and investments of various ways. A wonderful career that's taken him all over the country, but he now resides in Morgantown and is committed to, like so many of us, committed to making West Virginia a special place now and for many years into the future. Full disclosure, I'm actually an investor in Mike's fund. He has created through Mountain State Capital venture capital angel type of portfolio, and I'm really pleased to be supporting those initiatives throughout West Virginia and extending up and down throughout other areas of Appalachia. So Mike, how about I just hand it over to you, and we'll look forward to your remarks.
Thank you, David. Can you hear me and see me okay?
We can see your slide. Can't see you though necessarily, but it could be just me.
Oh, you're lucky. What can I say? Let's see if I can get back.
See you now. We're good.
All right. All right. Well, welcome everybody. Let me back up here for a second here. In the interest of time, I know we're running late and I'm basically the last presenter. So in the interest of time, and I suggest maybe kidney preservation, I'm going to go through this very, very quickly. You're going to see a lot of slides here with links on them. And these slides will be available to you through the presentation people here putting this particular sessions together. So don't worry about it if you can't catch a lot of this stuff here. So I really want to get to the back end of my presentation in the interest of time in order to present you with some suggestions what we need to do. But let me go through this quickly. This is what I'm going to try to do, is going to trying to go through and show you where funds are available in West Virginia and what the pros and cons of that are, where to find help and where to find money. Because at the end of the day, we want to grow our economy, we want to grow things in our state. I think you all recognize that capital is certainly pretty important. So this big picture here of the capital continuum, and I'm not going to go into great detail here, but what you see on the left-hand side is what we characterize as lower risk or lower reward types of investments, normally come from banks and so on. And to the far right, when you're talking about investments from venture capital and angel funds, they're generally speaking higher risk but higher reward types of investments. I'm going to fill this in for West Virginia here in just a minute. And this pretty picture kind of also tries to help you understand the time frames and the amounts of money that are put in by the different types of people who like to make investments, whether it's in small businesses all the way up to large businesses. So you have money that comes from perhaps from family and friends and banks all the way up to traditional private equity and venture funds. So take a look at that later when you have more time. Let's just start out with the banks. And this is where most people, when they want to get money, they go to their local bank. And this is pretty normal. But banks, by definition, are very risk averse. They have this odd thing about, if they loan you money, they actually want you to repay it. And that's okay. But with no disrespect to the banks, I think it's pretty fair to say that the banks are not necessarily there to help you create your next technology company. So I would suggest that you be very, very careful when you go into your banks, be prepared. But for small businesses, it's always a challenge for banks to be able to provide that kind of funding without going through a significant amount of due diligence on you and making sure that you have the capacity to pay them back. But we do have resources in the state. We have the Small Business Administration. You can see on the slide here that they have a lot of different programs that people can go to if they want capital. This was just announced the other day by Huntington Bank. They're throwing in about 25 million bucks into West Virginia here, somewhere around that, in a community plan to help out small businesses. And they'll be working closely with the SBA on some less draconian terms to try to help our local businesses get going here in West Virginia. So pay attention to that. There'll be more announcements of that. And then along with the SBA, there are a lot of federal programs, and you can see the links here on your screen that you can go to through the SBA, through the SBA for microloans. And this is what we suggest, that when people come to me and others asking for where do I find money, we generally speaking will turn them over to the SBA if it's a small business, because these people are prepared to provide the kind of funding that small businesses need. And in particular, there are some government agencies, like in this case, the Agriculture Department, that also has some funding available and some links for those of you interested in go there. There's another group called the West Virginia Loan Fund Collaborative, in conjunction with the economic development organizations within West Virginia and the Benedum Foundation. And it's a group of banks that get together, and they can also be a source that you can go to. Let me switch over to what we call risk capital, which is now on the right-hand side of that previous slide. And then because we get this all the time, a lot of people will contact us at Mountain State Capital and say, I'm an entrepreneur, I want money. Where do I get it? We just mentioned a little bit about the banks and the SBA, but frankly, when you're trying to start a company, especially like a tech company, something like that, an entrepreneur will need money. And the first thing I always tell them is go to your own piggy bank, because that's the best way to start your company if you have your own money. But very few people have that. Next thing we go to, we call friends and family, or maybe you have a rich uncle or a local business person that may be interested in what you're doing to basically loan you the money with great risks. And then you have these other organizations that you're probably familiar with, that now that everybody has seen the Shark Tank for the last several years, angels and angel groups that will perhaps invest in early stage companies, venture capital organizations, and private equity funds. That's the good news. The bad news in West Virginia is there is one very, very small angel group, only one venture capital fund, and that's ours, and very few private equity companies. But we're going to talk about that, what we need to do in the future to try to fix that. But that's the whole definition of risk capital. A little bit more about angels and VCs. Angels tend to give investments in the 25 to 50K range. Venture capital in our fund, we tend to invest $200,000 to $500,000, and then private equity firms will be looking for buyouts, and they're usually doing that with multiples of millions of dollars worth of investments. So back to the West Virginia picture. This is what it kind of looks like. We have our banks on the upper left-hand corner who provide loans in the form of debt or subordinate debt. And on the right-hand side, you see the West Virginia Growth Investment Fund, which was an angel fund we put together in 2013 that now has spent all its money. There's no more funds available to that. There's a small fund in the southern part of the state called CRAN, Country Roads Angel Network. But Mountain State Capital, we're the only venture capital fund in the area. In fact, I might add, the only only venture capital fund in pretty much in the region, including Western Pennsylvania and the Northern Panhandle, that has any kind of what we call dry powder or money to invest, which is really sad because there's plenty, and I mean plenty of deal flow in our region. That's the good news. Another pretty picture to kind of show you the continuum of capital and how this kind of works. You can look at this later at your leisure, but people need to understand when you invest in startup businesses and entrepreneurs in particular, you need to get it off the ground, but there's always going to be a need for additional funding and additional mentorship and additional development as these particular companies go through their growth phases. So that's the good news. The bad news is, and I mean this very sincerely, is that the problem that we have here, and one of the big problems in West Virginia, because I get a lot of phone calls and emails almost every day, people looking for money and they just don't know where to go. So I want to go through some ideas here, and you can look at this later on at your leisure. One of the organizations we have here is a Small Business Development Center, and you'll hear me say this throughout the presentation. All these organizations that exist here in the state are underfunded and understaffed. But Deborah Martin and her team do the best job they can possibly do with the resource they have to try to guide people to what to do. Okay, next we have the West Virginia Development Office. We've heard some good things earlier in the presentation about what they're doing. Mike Graney and that group have done a terrific job. But again, understaffed, underfunded. The state's got to step up here and provide more resources, because we can really move the economy here if we can do that in big chunks by bringing in big manufacturing facilities and big companies. Actually moves the needle a lot better for us here in West Virginia. And there are plenty of programs available through the West Virginia Economic Development Authority. Would suggest that people looking for money also contact them. Local resources exist throughout the state here. When I was putting this presentation together, I try to pull resources together. I don't guarantee that all of these links are now still available, but it gives you an idea that there are places that people can go if they're looking for funding. And then there's grants. And this one comes up a lot because grants are a great place for people to get money. The problem is that writing grants is an art, it's not a science. And you really need to focus on the best way to write your grants in order to get the money, because for all intents and purposes, it's non-recoverable funding from the government as a rule. Okay, so you want non-recourse loans and availability for good money through these kind of programs that suggest that people always go and try to get a grant. It's a great place to get money. You've all heard about crowdfunding. A lot of people do this. They go to Kickstarter or to any Kiva, and these kind of organizations, especially for small companies, another great source for people to go find funding. And you probably have also heard about the likes of Prosper.com and LendingClub.com, who also have programs at moderate kind of interest rates, reasonable interest rates for people who are trying to borrow money for certain things. Last year, WVU put out this whole program of West Virginia Forward, a great program. This link is probably still live, and there are plenty of opportunities for you to go there and look for places for help or money. And then there's Tech Connect under Ann Barth's organization, again, underfunded, understaffed, but there are grants available with them, and they'll be able to help people find money through their programs. And finally, when we get to angel and venture capital, this is the list of organizations that potentially have money. And again, all of them do not have enough money to meet the needs of what we need to do here in West Virginia. JIT and Innova scrounge for dollars every year. They do a great job of providing mentorship and guidance for people, but they don't have a lot of money, and this has to be fixed, and I'll get to that in a minute. The Country Roads Angel Network is a small network, angel network. Tri-State Angel Group is actually across the border, and they have there for helping people figure out and navigate through the funding situation. And then, of course, Mountain State Capital, our fund, which is a very, very small fund. It's only a $20 million fund. And by venture capital fund kind of measurements, it's very small, but we're doing the best we can to try to meet the needs of our state and our region. I mentioned the Appalachian Investor Alliance is also a group we're working with very closely, again, across the border in Tennessee and in Kentucky. And but they've been working with us here in West Virginia for some time. And then finally, there's a whole bunch of a lot of these are still alive within communities across the state. You can look this at your leisure. And then there's finally the Coalfield Development Organization down in the Huntington area and the West Virginia Hub, who also can provide resources. And finally, our universities and community college throughout the state have a ton of different entrepreneur programs to help people navigate through the system, provide some mentorship and some guidelines, and also perhaps point you in a direction of how to find funding. All right, so if you summarize that and you throw all those logos on one slide, this is what it looks like. So you're all looking at it and you're saying, wow, this is really great. We have so many places we can go to for funding. I would suggest and say very strongly that this impact slide is put up there by me as on purpose, because the way it works here in West Virginia, and I would suggest perhaps the only reason it works here in West Virginia is because of who we are and the fact that we are 1 degree of separation from one another. So if you throw a dart at this particular slide and you hit something, somebody there will say, no, no, you need to talk to this guy over there or this person over there. And we toss this around like a football until hopefully somebody catches it and can run with it. That's no way to run a railroad. But this is the way things have been working here in West Virginia for the last, at least as long as I've been here, for the last 25 years. So how do you find help? How do you find mentoring? How do you find funding to meet your needs? Well, let me break this down just for a minute into 3 categories: small businesses, large opportunities, angel investments. So a small business, these numbers are probably wrong. They're always wrong, but they're close. And Small Business Administration says a small business is 500 employees, and there's a lot of them throughout the country, so on and so forth. It's the bulk of what's going on. This particular slide, John Deskins will probably tell me is wrong. It's always going to be wrong, but frankly speaking, we are all about small businesses in West Virginia. Let's not kid ourselves. Okay, 99% of the businesses in West Virginia are small, and there are a lot of them. So how do we meet the needs of all these small businesses? Because sadly, half of them are going to fail in the first year, and none of them are going to make 95% are going to fail within 5 years, primarily because of lack of access to capital, lack of insufficient startup organizational assistance and guidance, and then additional guidance and mentorship as the companies grow is really a real problem here in West Virginia that we have to fix. So all these businesses here from the previous slide are all around here to help us help small businesses. This is great. Large opportunities, okay, you want to build a cracker plant, you want to build a manufacturing facility. There are federal government agencies that would love to come to West Virginia and reside here. Sorry about these slides. That could come here and provide services that are not necessarily need to be in Washington, D.C. There's a whole movement to move some of these government agencies, out of D.C. Okay, and at the West Virginia High Tech Council Foundation, there's a move there to try to bring more government agencies there as a continuation of operation facility, especially in a place like that, which has plenty of power, plenty of broadband, and so on. So these are the kind of things that we call large opportunities, chemical and agricultural things. But now you go back to my slide and you say, well, where do I go? And the issue here is, well, you really only can go to a few places, and that's a development office within the Department of Commerce, the EDA, or the High Tech Council Foundation. So there's not a lot of places if you really want what we call a large opportunity. But when you get to the venture-backed opportunities, and this feeds into the things that Greg and Danny were talking about earlier. Okay, we want to bring entrepreneurs here. We want to bring tech-based companies here. We want to bring companies that develop these kind of products here. We want these people from Google and from Microsoft and from eBay and all these tech companies to be able to send their people here, and based on the outdoor economy, which I think is a great idea, but they're going to come here and try to develop these kind of companies. All right, these are the kind of things that are going to move needles, and these have to be backed by venture-backed facilities like Mountain State Capital and other venture capital funds. These are the kind of things that are going to move the needle a lot better in West Virginia, but these are the kind of things that we really do want to attract here in West Virginia. Now you look at the slide again, and now it gets even smaller. There's so few people available to provide not only the funding, but the mentorship and the guidance to how to build those kind of companies. We have to fix that, right? So let me get to my conclusions here in a couple of slides here. So every state has to be participating in this. And every state, and I've lived in New York, Pennsylvania, Maryland, Virginia, and now here in West Virginia for the last 25 years. All those other states to the north and the east have programs within the state, within the governor's office, within the state legislature that provide funding for the kinds of companies we need to create here in West Virginia based on the tech-based economy we want to build and the outdoor economy that's going to attract these people to come here. And when we attract those people to come here for the outdoor economy, they're going to bring their friends and they're going to create companies. But the state has to be a participant in this. And it's sad that as long as I've been here in West Virginia, the state has not stepped up, and we need to fix that. And they have to provide funding for these type of opportunities. So these are the kind of questions I like to ask at every presentation I give here: the who, what, where, so what. And the last one is the one that's the most critical, because we as a society are really good about presenting problems. We're good at that. We're even pretty good at the so what. But when it gets to the now what, well, maybe we'll have another meeting about that and discuss that later. But we have to have some specific things to do, and I'm trying to give you some ideas. Let's be honest with ourselves here for the first time. Who are we? We're a very, very small state with 1.8 million people, diminishing population, death rate exceeding our birth rate, and our kids are leaving, seeking jobs and opportunities elsewhere. This is criminal. This is sad. We have to fix that. When we want to bring people here to come to West Virginia, and again, I love the outdoor economy and all those things that were presented earlier are really important for us. We also have to fix our education system, okay? And we have to attract our more and better teachers who are really suffering from fatigue, along with all the rest of our kids who are doing all these things online. We have to get our business community, and I implore you folks in the Northern Panhandle to get involved with our education system and help modify curricula within your local system, economic systems and education systems, to make sure that the education community is teaching the kids the things that you need if you're going to hire them into your businesses. And it only happens if you get engaged with your education system. And I say that I have a right to talk about this after spending 7.5 years of my life on the state school board and almost 2 years as the president. We have to fix this problem. The three big things, and we're going to get to the third one in a second, is certainly education. You heard about housing needs. And then finally, we talk about broadband, and I'm going to badger you on that a little bit here. We have more potholes in our broadband system than we do have in our roads and on our bridges. We have to fix this in broadband. We have to fix cellular. Back to the outdoor economy and tech-based economy strategy, people are not going to come here if they're not going to have good broadband, good communication. We are narcissists. When that guy is climbing the wall or on a waveboard or on his bike or skiing, he's going to want to be transmitting and speaking to all of his buddies all the time. You know, in the old days, we talked about the fact when you want to go to the outdoors, you want to get away from the world. I think those days are over. I think people are going to want to be connected 24/7, no matter where they are. And in order to do that, we have to have a better infrastructure. And it's not only roads and not only bridges, it's broadband and cellular, and we have to fix that. And finally, we have major deficiencies in marketing ourselves. Everybody who comes here says, I love living here in West Virginia. I came here 25 years ago, and I'm not leaving because I love living here in West Virginia because it's a great place to live based on all the things you just heard about a few minutes ago. Okay, so what should be our priorities? We have to invest in us. Okay, we can't wait for somebody else to come in and just drop millions of dollars on us. The state has to step up. We have to be able to find funding to create new companies, new jobs, and new careers. We have to attract to work here, and we have to fix the issues that I mentioned ago. That's broadband, that's housing, and education. And we have to encourage expats to come home. Many of us know people who've moved to the coast, would love to come back here. But the first question is, where am I going to live? What kind of job am I going to get? And where am I going to educate my kids? Those are big questions that have to be answered. They have to be fixed here. But we have to invest, to spend money to do that. And I encourage people to get involved in doing that. And one more time on marketing. We have the best story. We really do. And we heard about what Brad Smith has done, and John Chambers, and Ray Lane, and other people who are expats that have left West Virginia that come from our roots. And I don't want them just to kind of mention that they came from West Virginia. We need to, I use the word exploit. We need to get them completely engaged in our strategies here. And we need to tell our story clearly, and we have to spend the money and do it right. I'm going to make a very specific suggestion back to what I said earlier. Most of the people that come to me, they just don't know where to go to find funding and find help if they want to start a business. I'm going to strongly recommend that we create some sort of an ombudsman, a West Virginia concierge service, that people can have one-stop shopping. They can call one individual up, one organization will be able to triage that and send you to the right place if you're trying to raise money. This is a chronic problem. We do not have to reinvent the wheel. This has been done in other organizations. There's a couple of links on the bottom that you can go to if you want to look at what other states have done. The AIA, the Appalachian Investment Alliance that I mentioned earlier, is right across the border in Tennessee. We work with them very, very closely. They've already got programs, and they can do this thing if we would just devote some time for people for the state to step up and have people go to one place to find answers, okay? So now what? Okay, let's go to the final here. I think that we're coming up on a new legislative session coming up in January. I think we have to demand action and result from our state leaders. They can't just sit back and hunker down and do nothing. They have to be involved with us. If you talk to any of our expats who talk about why things don't work in West Virginia, they always come back to this particular situation. They always say that we have to get our legislature and our governor's office engaged with us. They have to spend the money, and we have to spend our money now. We can't wait. And we have to be able to support entrepreneurship and all businesses. And finally, I will say we have to demand a new sense of urgency here in West Virginia. We have the opportunity in front of us. We've heard some great opportunities, especially from what Greg and Danny were talking about, but the state has to be an active partner in this. So I know that's a lot, and I probably went over my time again, David, but passionate about this. I think that it's important for us to completely get engaged as a state, because I don't know that this is not our last chance. Okay, we're going to come out of this COVID situation. We know we're going to come out on the positive side, but we do have a sense of urgency, and I would hope that people will get together and try to fix things here instead of just feeling sorry for ourselves like we've done here in West Virginia for too many decades. We have the opportunity. Let's grab it.
Mike, I couldn't agree more, and I share that passion and enthusiasm. We'll give everybody an opportunity to pose any questions through our chat box. I do have a couple of quick comments I want to share, and I want to make sure everybody's clear. We have a special treat today, kind of a bonus, building on the last point that Mike said about how important it is the state is involved in potentially funding / incentivizing. Mark Mukow wasn't on the agenda, but John Duskins has invited him to join us today, and so we're gonna tack on just an extra 5 or 10 minutes just to give a quick update on the finances of the state and just what kind of resources are available. What is the state of the state, so to speak, the financial state of the financial condition of the state, and are the resources available to invest in those types of avenues? It gives you an opportunity to lobby your legislatures and the governor, of course, for any influence. So I just want to say, again, thank you, Mike, so much. One of the things that stands out to me is that West Virginia has benefited from its very start from natural, God, I can't spit it out, natural competitive advantages. And I think we've talked about today is we have one of those opportunities in the midst of an expansion of technology, a desire for socially distanced work, the capabilities for remote working. I'm super excited about it, and I'm eager to see us kind of act on the opportunity. There's a lot of personal wealth in West Virginia. There are programs, all of which Mike just spoke of, and one that he didn't talk about, which frankly I think would be worth exploring on your own, is opportunity zones and opportunity zone funds. There are some real attractive tax-sensitive advantages to investing in these census tracts that exist throughout West Virginia, many of them in the heart of downtown Wheeling, a lot of incentives to attract appreciated capital, so to speak. So whether you have the resources and the desire to make those investments yourself, or you're in a position and they have contacts to influence those, to make those type of decisions, I think I speak on behalf of Mike and John and Greg and Danny and Mark. we just challenge you to act on those. You know, the next 12 months, advance these themes we've been sharing. I think it's important. I think with that sense of urgency that Mike talked about is absolutely critical. There's wind at our back, number one. The trends are moving in our direction, but we have to be ready to move. Mike, I two things. One, for all those that are looking for CEs, Mike's session is 468. And interestingly, I don't have any questions. There are no questions been raised. So Mike, thank you very much for your comments. Anything else you wanted to share, or are we ready to wrap?
Yeah, ready to wrap. Unless anybody has any questions, if people want access to that presentation, I'm sure you folks can provide that too.
Perfect. Thank you very much. John, I'll hand it over to you, and Mark.
I'm here. And
All
I'm
right.
going to share my screen.
I'll just introduce you, Mark. Mark serves, for those of you who don't know him, he serves as Deputy Secretary of Revenue down in Charleston, and he always has really valuable information about where the state budget is, and it's very closely connected to the state economic outlook talk. So, Mark.
Thank you, John. Thank you. Everyone see my screen?
Not yet.
Okay, I've shared it. Huh.
Ooh. I am not seeing the shared.
Okay, let me try again. Let's see. Share screen. I'm clicking the share screen sign.
Do you have dual screens? Is it possibly on the wrong side of your monitor?
I only have one screen on right now.
Oh. Well, I don't.
Well, I could always talk without the presentation. I think that may have to do right now.
Okay, just go ahead and feel free to turn your camera on as well so the audience can see you.
Okay. Let's see. Share to start video. Okay, let me see. I have to figure out how to turn my camera on. Let's see here. Can I start video? Start my video.
All right, very good.
Okay, I'm on. Maybe that's, let me try sharing the screen one more time, see if that works at all. Well, I'll go without sharing the screen. Well, I mentioned that our tax collections prior to the pandemic were in pretty good shape. We were actually running ahead of last year's collections by about 0.3%. We were very close to estimate through the first 9 months of the year. And we had positive growth in both personal income and sales tax. And not only that, the third quarter, which would have been January through March, was our best quarter. We had over 4% growth in both the sales tax and the personal income tax for that quarter. And then pandemic hit. Now, the reason why we were only up 0.3% had a lot to do with the energy sector. We were expecting a weak energy sector, and we did have a weak energy sector with collections running about 30% below the prior year. So that was weighing on the negative side. We were projecting a relatively conservative fourth quarter because for the entire year, we were projecting only a negative 1.3% revenue decline, mostly due to the energy side. And what we got in the fourth quarter was a whole lot worse than that. Our collections actually dropped by over 27%. Part of that was decision on the federal level and the state level to defer income tax collections that were due in April and June for the most part, from April 15th to July 15th. So that effectively shifted about $200 million from fiscal year 20 to fiscal year 21. And that created part of the problem, but there was an additional decline in collections of close to $200 million beyond that. So we were very close to $400 million decline in receipts in that last quarter, with the energy sector took a turn for the worse. Collections in that quarter were down 68%. We had a big sharp drop in personal income tax of about 30%. About 70 million of that personal income tax collection drop was due to the economic factors, particularly the higher unemployment numbers that came in. And our corporate numbers were down about 66%. And Also, lottery receipts because of a shutdown of various establishments around the state temporarily in April and May. Lottery revenues fell below estimate by about $10.7 million for the final quarter of the year. So that created a significant budget gap. Now, the $400 million reduction, the budget gap was only about $300 million because we were already projecting before this about a 6% decline in fourth quarter collections. But we ended up with a little over $300 million budget gap. We were able to use about $103 million of one-time revenues to help the equation, including about $23 million from income tax refund reserve monies. We had once every 10-year liquor license rebid. We were able to accelerate at almost $16 additional million in before the end of the fiscal year, so that helped. We also took advantage on the spending side. Among the various stimulus measures, the federal government allowed an increase in the FMAP, which is a federal Medicaid percentage increase, and that generated an extra $95 million. So we effectively did a end of the year reduction in spending authority of about $199 million, of which about $186 million was in Medicaid and $13 million was in other funds that we knew were going to expire anyway. And on the Medicaid side, it was no cut in services because we had the funds available either through the increased FMAP and or we also had $150 million in reserve funds in Medicaid. So that was one time. The good news on the Medicaid front is the FMAP increase amounts to an extra $50 million a quarter for the state of West Virginia, going back to the beginning of this calendar year. So, and that until the emergency expires, and that is going to continue at least through the end of this calendar year. So we're looking at $50 million a quarter. That would be basically at the end of the year, barring huge increase in Medicaid spending, we should be roughly stable with Medicaid funding. Wanted to mention that with all that, we ended up significantly below estimate on the numbers, but because we closed the budgetary gap, and there were some additional expirations at the end of the year where agencies did not spend their full allotment. We ended up with a $28 million budgetary surplus, of which $14 million went to the Revenue Shortfall Reserve Fund, and the remaining $14 million was available for surplus appropriations, of which about $8 million actually went to I think it was either 6 or 8 million went to the Milton flood wall. So there's a little bit of money left over for fiscal year 21. Moving on to fiscal year 21. I can just tell about the first quarter of 21, we benefited from the $200 million revenue carryover, about $144 million in personal income tax, $56 million in corporate income tax. That got us off to a good start. So even though in the first quarter, all other revenue collections collectively fell by, about almost about $60 million, we still ended up 12.8% ahead of last year. And actually did better than what we were projecting. The numbers are fairly strong. We're up 90 million compared to estimate and 12.8% ahead of last year. Again, most of that had to do with the deferral revenue. Otherwise, we'd be down about 5.4%. And finally, I want to mention this pandemic and unusual recession and recovery. We have areas of weakness and areas of strength on the revenue front. And the areas of weakness, the severance tax and the energy sector is probably the weakest and shows the strongest decline. I think income taxes will be negatively impacted for the next year or two related to the employment decline due to the fact that we have more work at home, less travel in and about. Motor fuel taxes have come down. Racetrack video lottery is a little lower than it would otherwise be because the racetracks are not fully up to full capacity. The work at home has also had a negative impact on insurance premium tax collections. And one of the collections that really coming up short is the state unemployment insurance tax collections, which are used to pay unemployment tax because we have fewer folks working. But areas of strength that stay at home and federal stimulus money on top of that, plus some pent-up demand. And we're not spending money on haircuts. We're not spending money on certain services, but we're spending more money on various goods. And beer tax, wine tax, cigarette tax, fireworks fees are all doing well. Limited video lottery gaming is doing very well. Also, the sales tax and the motor vehicle sales tax has done fairly well compared to what we would ever expect. I'm sure that, and also at the municipal side, I just looked at the Northern Panhandle cities that impose local sales tax. And everyone that's imposed local sales tax for more than a couple of years has had a double-digit increase in their sales tax collections and distribution for that September through or July through September period. So sales tax doing pretty well. People are buying motor vehicles. We're just not spending our money on gasoline and haircuts these days. And our outlook for the year is I think the collections overall will be close to estimate, maybe a little less, maybe a little more, but there's a lot of uncertainty in the future. We don't know about an additional federal stimulus, how the pandemic is going to turn. So there's a lot of uncertainty heading forward. And with that, I'll pass it on. Hopefully I didn't overrun my time too much.
Thank you so much, Mark. As always, we really appreciate that. We're sorry we couldn't get the slides going this year, but it was still great information. Just a quick note, the code for Mark's presentation for continuing education credits is 579. So 579. And that wraps up our West Virginia Wheeling Area Economic Outlook Conference. I really enjoy visiting with you folks in Wheeling in person. So I really hope that this event is back to in person next year. Look forward to seeing you then. Hope you had a informative conference today. And thank you all so much for joining. Have a great day.